Hello, everybody. I'm Jordi from the Royco team, and today we are going to be doing another podcast. And this time we have a very special guest. We have Jay here. How are you, Jay?
I'm great. Thanks for having me.
I'm super glad you're jumping on this podcast. And first of all, I wanted to introduce yourself and tell us a bit about you.
I'll give you my quick crypto origin story. Got into crypto back in 2016. Very quickly started playing with all of the different ICOs. And I was like, whoa, this is awesome. I just figured out a hack for making money essentially. And I was in high school at the time, so built a mobile wallet that made it super easy to buy and sell all these cryptos. Ends up getting acquired by a firm called MyCrypto, which was the actual first Ethereum wallet with a graphical user interface. They end up then getting acquired by MetaMask. But in 2020, my senior year of high school, basically started a DeFi protocol called Rari Capital, basically unlocked lending and borrowing on any asset. It was kind of like Morpho before Morpho, grew that to about $1.5 billion in under management, was acquired at the end of 2022, and then started Waymont in 2023.
Very nice. Like your story is huge. You've done lots of things, and well, Royco is a very ambitious project. There are lots of things in the pipeline, and today we're gonna be talking about where's Royco today, but also, and we will focusing on to where will be Royco tomorrow and maybe in a near future. So yeah, let's get started. I wanted you to please explain Royco in one sentence, like really quick for a person that don't know anything about us.
I would describe Royco in one sentence as a platform to connect LPs and on-chain users with great yield opportunities.
That's very interesting. Let's get a bit deeper on this. Let's understand how it works. Also, which kind of assets we can see now listed in Royco, and which are the mechanisms that make Royco different.
Mm, mm. Yeah, so why don't we start with kind of how we landed here, because it shares some good context, right? So we rewind crypto back, let's say, even a year ago, right? Most yields were generated on chain, right? Meaning that most yields were generated by borrowing on or lending crypto. That was creating yield from borrow demand. It was creating yield from AMMs and trading fees. And it was creating yield from token incentives. What we've seen happen over the last year is those yields have gone to zero, right? Those yields have literally gone to zero. There is not much alpha in providing liquidity to purely native DeFi liquidity venues. So there's all this DeFi capital. Where is it going to go? It's now going to these off-chain yields, right? Going to these off-chain opportunities. This was a movement that started happening last year and has only accelerated and is growing rapidly, right? So we saw this happening and we said, well, our entire business, the Royco business, right, is connecting these LPs to these yield opportunities. These yield opportunities are now changing, and accordingly, our tools need to change. So Royco developed these tools to enable us to tranche these yields, right? Now, why is that important? Because the LP base is pretty different, right? You have these more sophisticated asset managers that want protection, and then you have these crypto native degens who are happy to go and get whatever yield and take on whatever risk. So now we could take these off-chain yields earning, let's say 10, 12%, and go and tranche it into a senior tranche that's safe and secure and protected by this junior tranche. And then this junior tranche that's higher risk, higher yield, and much more suitable for these crypto natives. So we went and built this tranching tool as Royco. And then what we went and did is started working with these different amazing partners that are going and generating this off-chain yield. So when you look at Royco today, what you'll see is some amazing partners that are going and lending to GPUs like USD AI, that are going and lending to OTC trades or going and doing OTC arbitrage, right? Like neutral, right? We have a lot of these different folks going and generating yields in all these off-chain ways. And Royco fundamentally enables them to go and tranche out that risk and sell it to LPs that they previously couldn't have gone and sold it to before.
That's super interesting. In fact, we will talk about this later on this podcast because we will be adding many markets, many different markets that are not actually available on chain now. So things will be changing really quick on Royco. But given that we have many markets live, I wanted to know what surprised you the most about how the protocol managed different events and which kind of users are joining Royco. Because now,
Mm.
as you said, we are offering kind of different products to the yield farmers. Yield farmers had one option before Royco. Now they have the underlying strategy and two other opportunities. So yeah, let's talk about that.
Yes, great question. So let's talk about the customer base of Royco first, right? It's split into those two different demographics I explained earlier. It's this subset of crypto natives on one side who are extremely willing to take on risk. Maybe for whatever reason, they're willing to take on that risk. And they are willing to take on that risk in exchange for a higher reward. On the other side, you have these more sophisticated asset managers who have very specific views in terms of how they want to construct their risk to reward, right? They want dampened volatility, some of them. Some of them don't want to be exposed to certain types of drawdowns. Some of them want to go into a stable coin, but are worried that it's not going to be a stable coin. So they need this additional protection, right? So this is what Royco fundamentally does is it enables protocols like Neutral, like USDAI, to now be able to go and access these pools of capital when in reality, they might have not been able to access those pools of capital before, right? So this is a net new unlock in terms of the capital base that protocols and yield opportunities are able to go and access, right? So that's one. And then two here is okay, what was surprising, right? What has been surprising? I would say one of the most interesting moments of observing Royco has been this APY USD market, right? We've seen an observation period triggered, right? So let's actually rewind. APY USD, yield accruing coin backed by Stretch and SATA and all of these micro strategy yield instruments, right? And now you have a junior senior tranche. That junior tranche was extremely successful, right? There was a way oversupply, a surplus of juniors in that pool. You had a senior tranche, which was growing, right? Had a few $1 million inside of it. And then what we saw was a drawdown on APY USD. Stretch and SATA both fell in value. The pool went into what we call an observation period, right? Where everything basically pauses, right? This means that juniors, right, who otherwise would have had to bear significant losses, they kind of have a period where they can wait it out. No losses are realized during this observation period. So this was our biggest observation period by far, right? We had on the scale of, I think, over $200,000 of losses at its peak, right? That junior tranche that they were going to absorb that would have led to I think, a negative 10% in terms of the share price of that junior tranche. And now what's happened is Stretch and SATA have started to recover. That junior tranche has a really good shot at coming out unscathed. This is the mechanism working. This is a great way to see the mechanism working. So this has been extremely exciting, albeit a roller coaster for the junior tranche, but extremely exciting and exactly what the mechanism was intended to go and do.
I would have explained the same, and it's really nice to see everything is working the way we decided it to work. The tranching space isn't empty. We are not the only tranching protocol. In fact, there have been many protocols doing similar things before us. So my question is, what's your read on the other approaches? And maybe also talk about what do you think these protocols that launched before us did wrong and why and how
Yeah.
we are solving these things or problems.
Yeah. First things first is Royco is built to be a risk transformation platform, right? That's what it fundamentally is it enables seniors to go in at a lower risk and enables juniors to come in at a higher risk. It's a risk transformation platform. So when we go and evaluate other players on the field. And you might say, okay, these are risk transformation platforms. We wouldn't have built Royco if there were really solid risk transformation platforms, right? Royco would not be a thing if there were really solid risk transformation platforms. Now, what was this gap that existed here? There were many, right? If we just look at, hey, what's happened with the stretch backed pools on all these different tranching platforms, many of these different tranching platforms, these juniors are completely wrecked, right? Completely wrecked, right? On Royco, they've come out safe. They've come out very safe, right? That's one. On two, the key in the center of all of these mechanisms is to make sure that the seniors are safe, right? Safer than the juniors, right? This involves having mechanisms like ensuring that there's going to be a specific amount of juniors at all time, right? Other players don't have this, right? I can go and bore you with all of the different mechanism design differences and go one by one by one. And just as I've gone through these 2 points here, but the point here is Royco wouldn't be a thing if these guys were doing all of their jobs. Fundamentally, there was a gap in risk transformation and a growing need from LPs who wanted real risk transformation. And that's what Royco went to go and solve. Now, that doesn't mean the scale of our ambition stopped there, but that's what we've gone and solved. And that's why Royco exists as it exists today.
You said you don't want to bore people with this kind of technical and mechanical stuff, but you already know I'm in love with one thing, which is our yield distribution mechanism. You already talked about the observation period, which is something that makes us unique, but I would say this mechanism, the YDM, is also really exciting, at least for me, and I want you to please explain it as simple as possible for the people that don't know how exactly works.
Totally, totally. So one of the really cool requirements for every Royco pool is that we have a certain level of junior capital as a requirement for every dollar in senior. Okay. So the way to think about this is, let's say there's a dollar in senior and there's a high volatility asset here, right? You want to make sure that there's a lot of juniors to cover any losses. So let's say that we say, hey, look, there needs to be at least 30 cents for every dollar in the senior, 30 cents in a junior for every dollar in the senior. That means if an underlying asset draws down 30%, the seniors are still safe, right? So that's this idea, which we internally call minimum coverage, right? That's this idea of how much junior is needed for every dollar in senior. Now, it would suck if users just had enough minimum coverage. Why would that suck? Because you wouldn't have any liquidity to come in and out of the pool. If there's $3 million as the minimum, right? And there's $3 million in the pool, that means that nobody could enter and exit the junior. So really the ideal version of a pool is when it has a little bit more, right? A little bit more than that 30% in this case that we're talking about. Let's say it has 35%. We go and target a surplus. And what the Royco mechanism has is this thing called the YDM. And with the YDM, it goes and allocates yield between the senior, between the junior to get to that target being a minimum coverage plus this surplus. So let's walk through an example. Let's look at a pool where you have this 30% minimum coverage. You have $10 million inside of your senior, $3 million at your junior. In this case, let's say there's $3 million in that junior, right? Nobody can enter and exit. That means that the pool needs more junior capital because we target a surplus. So in that case, we redirect all of the yield to those juniors, or rather the pool redirects all of the yield over to those juniors, right? And then let's say now junior capital starts flowing in because there's an increased yield, right? Now slowly the pool is going to reach its target. And at that point, it'll give some to the seniors, some to the juniors. And now let's say there's so much junior capital, it'll start to go and give more to the senior. This is really cool because if you go and look at all of the traditional finance examples, these are set by people, right? These are set by people. These are set on durations, right? This is a system where code is doing it in real time on a per block basis and divvying up the yields based on exactly what the market needs at that time, right? This is one of the coolest mechanisms because it gives the market exactly what it needs. And it's an automated way for making sure that the entire system is healthy, and it requires no human intervention. It requires no people getting on the phone and talking about the yields. And all it is just Solidity operating how Solidity operates.
Now that's awesome. I really love that. If you want to know more about it, I suggest you to go to our documentation, which is also updated, so you have a clearer view on how we manage these things and how this curve adapts over time. But yeah, now that we have explained how Royco Down works, let's start viewing the future. Okay, so you said that Dawn solved risk transformation, but there are things missing. So I want you to please explain what's still missing and start talking about Dusk, which will
Yes.
be this next phase of the protocol, and that will try to add things above Dawn that Dawn itself couldn't deliver.
Yeah. Royco Dusk is a leap forward in terms of how DeFi is going to handle yields and duration assets. Right? Let's talk through the current environment. The current environment is we're seeing yields now compressing, right? And yields now going to assets with longer duration, right? You go look at ACRED, that's a 3-month long duration, right? You go look at M Global, and I believe that's monthly redemptions, right? If you go one by one by one through all of these awesome new yield opportunities coming on chain, they'll have these crazy durations. So what Royco Dusk does at its most fundamental level is it enables us to transform the liquidity profile of any duration asset into something that is always liquid, right? We can transform a duration asset into something that's always liquid. That's really, really powerful, right? Because now you can go cater towards all of these on chain and crypto natives who really don't want to take on some duration, whether that be a stable coin, whether that be just like a crypto native degen looking to park cash somewhere, whatever it is. Now you can go and offer yields that you previously couldn't offer them because of this duration and offer it instantly, right? So how does this work, right? This sounds like wizardry, right? How it works is we go and take one of these yields, or rather, any protocol can come to Royco. They bring their yields, and they go launch a senior junior pool, same as Royco today. This new upgrade has one key difference. Instead of the junior tranche, which previously would have invested alongside the senior tranche into whatever the yield source is, in this case, it's going and providing liquidity onto an AMM, right? Why is it providing liquidity onto an AMM, and for what purpose? It's providing liquidity onto an AMM where you have stable coins and the senior trunk. Okay. So now let's zoom out and talk about why is that valuable? Because now the senior tranche, if they want to exit their opportunity, they can sell directly into that AMM pool, right? And they can get out, right? Whenever they want. That senior tranche, you just can go and sell and get out. Now, what does the system look like? Just zooming out, right? You have a senior tranche who has this secondary liquidity pool that's guaranteed to always be there and can exit opportunity at any given time. And then you have that junior tranche who's willing to take on that duration risk by basically LPing into that pool. And then second of all, is going to obviously absorb that first loss capital, same as Royco offers today. So this is a transformative experience for all of these duration assets. Not only that, but now it unlocks all of the layers that you can go and access with DeFi, right? That expect liquidity, such as looping, such as leverage, right? These are things that are difficult with duration assets that now suddenly you unlock because these are now liquid assets. They are no longer duration assets because they've been transformed by Dusk.
That's super interesting. I want to see it live as soon as possible.
Me and you both.
Um, I know timelines are impossible here in DeFi, but just before zooming out and explaining a bit about how we see the world, how we see private credit, and these things you already introduced when talking about USDAI and other companies. Yeah, when can we expect for Dusk to launch?
Yeah. I'm holding my breath. That said, we are targeting for that to be deployed in mid-July.
That would be super, super cool. Let's build during this summer. So then in September, everyone has this available and they just freak out because it will be absolutely insane, I'm sure. As I said before, I want you to please also zoom out. Let's not talk about Royco down or
Yeah,
dust.
yeah.
Let's talk about where is the world heading. You talked about these protocols. We are already onboarding on our protocol, but there are lots of new strategies coming on chain which are also similar. So, yeah, I wanted you to please explain a bit more about private credit because most of them are related to that. And we will see some of them also being on Royco. So, yeah, let's
Yeah.
start this conversation.
Yes, yes, definitely. So Jordi and I, over the last couple of weeks, have been having this ongoing discussion about financing and venture capital and private credit and the future of all of these, right? The most exciting opportunity that DeFi has is to fundamentally compete as the best financing source for any entrepreneur looking to go and scale their operation, right? DeFi, in my opinion, that's where DeFi goes. Is it's going to be the best financing venue, period, right? Now, how does DeFi or why is that the case, right? Let's talk about that first, right? Venture capital as an industry, right? It's great. It's great. It enables all these high growth startups. However, now these days, most financing ends up going to real assets. Maybe that's GPUs, right? Maybe that's real estate, whatever. The vast majority of financing is now going to real assets, right? Data centers, whatever. In a world where the vast majority of financing is going to real assets, right? Where is all that financing going to come from? Private credit, right? Folks going in underwriting credit, right? Maybe that's some of the banks, but banks aren't built to go and do a lot of the activities. More on the higher risk side of things, right? And on the more interesting and innovative side of things, right? This is where DeFi, I think, can go and fill that hole, right? DeFi can uniquely go and underwrite these opportunities, extend credit, and offer all of these financial tools around it to go and service all of these transactions. What the hell does that mean? What are these specific opportunities that I'm talking about? This next generation of innovation, whether that be scaling up self driving cars, building data centers in space, uh, going and building robotics, right? And going and actually building these humanoid robots. These are activities that don't need to be financed exclusively by venture capital, yet they have some amount of risk inside of them. And my hope is that Royco can go and finance them. And DeFi as a collective can go and finance them and can go and build and transform these yields and this risk into something that's digestible for an average LP.
That's super interesting. In fact, you already explained that, but I want you to please go deeper on that stuff. You said venture capitals are great to help companies grow quickly and blah, blah, blah. But you also told me, and this is a conversation we had yesterday, that this way of doing things is also more expensive for the company itself.
Yeah.
So, can you explain why and why DeFi matters here? And also, the power of democratizing this credit to like everybody in the space.
Yeah. Yeah. So, why is it expensive for a company to take on venture capital? Is they're selling shares. They're giving up their upside, right? That upside, those shares, they would have been the company's otherwise. These new alternative sources of financing, things like private credit, yada, 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 right? Things like what USDAI is doing is making it so that folks, they don't need to go and get dilutive financing. Instead, they get on a financing plan that's backed by real assets. This is a lot less expensive for companies than any sort of dilutive financing, you know? So again, for really quality companies, for really quality entrepreneurs, for really quality collateral, this is the future, right? It's less expensive, it's faster, it's easier, right? You're not giving up control of your company. You're not giving up board seats. You're not giving up a massive amount of equity. And I think you're hitting on this final piece here, which is really, really important as well, which is you're also giving users an opportunity to participate in that wealth creation. We look at trades like the data center trade, we look at trades like the self driving trade, right? These are all trades that retail, for the most part, has been cut out from. If DeFi, if Royco does its job correctly, not only will we see companies moving in this direction, but we will now transform that wealth creation that was previously stuck inside of these institutions to the masses, you know? And that's something that's really important at this time in the world, is to enable that wealth creation for the masses. Because right now, the best retail is getting is SpaceX at $1.8 trillion dollars, or Anthropic at trillion dollars, who knows what by the time they all come out, right? But point is that this is going to be an extremely important piece of technology if done correctly, because it'll deliver on DeFi's core and initial vision, which is to democratize access to all of these opportunities.
That's super super cool. And in fact, also a thing I wanted to explain in this podcast, because I'm sure people that will be listening to this podcast have very good ideas, and maybe this would be a door to open and say, hey, we could start building this because of Royco. Okay, so yeah, let's
Yeah.
explain what would be the path for any company to start building this way.
Yeah.
and
Companies should
and
reach out
also
to us.
while using Royco's tech and our RWA, infrastructure.
Yeah. Companies should reach out to us. And, we've spoken over the last couple weeks with companies doing the most fascinating things, right? From going and financing these self-driving cars to going and financing household appliances across Southeast Asia, yada, yada, yada. Some of the most amazing entrepreneurs, some of the most amazing activities that's generating real yield for their LPs. And we hope to help them and be partners to them through their entire on chain journey, from the tokenization to the discussions with curators to the tranching to the secondary liquidity. We want to be partners to all of these folks to help them go and expand and get an LP base that is full of their customers, that is full of DeFi folks, that is full of real people, and do that at a better price and in a much more economic way than they could otherwise go and get.
Very nice, very nice. So now that we know everything related to the future of Royco, Dawn, then Dusk, let's do an exercise on trying to imagine our own company from now to 1 year moving forward. Where do you see Royco in a year, and
Yeah,
how
yeah,
users can benefit on all these technical things we will be deploying?
yeah. It is my hope that in a year, Royco can be the venue where users go and access all these sorts of amazing financing opportunities and have the ability to transform that risk and reward however they want. Right? And similar, where we can be that interface with these companies, with these amazing companies, and help them navigate this on chain world. If we can go and do those two jobs, the sky's the limit.
Aligned on that. You know, there are lots of things happening right now in DeFi. It seems like the space is a bit quiet because of the market, but it is not. There are lots of things happening right now. I wanted you to please explain, like, not Royco related stuff. Like, explain what are you excited about DeFi right now, and also what makes you worry, because we've seen lots of hacks, we've seen lots of many bad things recently. So yeah, like,
Yep.
what do you see as a good part of DeFi moving forward, and bad things?
Bad things, the easy one to say is security, right? The maybe less spoken about one is consolidation, right? We're seeing consolidation of protocols. We're seeing protocols shutting down left and right, right? We're seeing tokens going to zero, actually zero. you know? And as part of all of this, it's really difficult to see DeFi innovating and creating these new primitives that we might see in TradFi that we might see elsewhere. And that's what I'm really scared of is a world where DeFi stops innovating and a world where these DeFi builders stop dreaming. I haven't seen new DeFi developers come into this space in years now. Right? We've just seen consolidation to the top 5 protocols and not much else. There have been minimal changes to the top 10 on DeFi Llama. My biggest fear is that that stays, right? And that we're stuck here, right? I hope that's not the case. And certainly some incentives are now flipping such that it shouldn't be the case, but that's what really scares me. The thing that I'm most excited for is for DeFi to grow up as part of all of this, right? As part of all these tokens going to zero, as part of teams shutting down. I think there's been a distinct shift from what used to be excitement around white papers and excitement around technical features and people staying up all night just to read a white paper to now that's switching to real businesses and real economics and away from this technical I don't know any other way to put it than circle jerk, you know? This is something that, for example, these DeFi protocols following Ethereum's lead adopted very early on is this idea of white paper, this idea of immutability, this idea of strict decentralization, right? And now we're seeing them grow up and face reality and say, okay, if I want to build a real business and stick around for the next 10 years, maybe I don't need all of those things and maybe I don't want to be Ethereum. So I think this is very good for the space and I'm excited to see and hope that this helps breed a new generation of entrepreneurs coming and building real businesses on these on-chain rails.
Awesome. Also wanted to know where Royco fits on all of this. Like you talked about security, and as we've said on socials, security is our paramount priority. But you as a co-founder, well, I need you as a co-founder to explain why security is
Yeah.
our paramount priority, and why are we going to do things different to reach this top 10.
Yeah. I mean, look, Waymont is one of the primary contributors to the Royco protocol, right? We're one of the dev teams. This means that we spend all of our time thinking about the code around Royco, right? Um, and that code in a is in an environment that is being targeted 24/7 by state actors, and we spend a lot of time thinking about how can we sleep at night. That's why we've gone and made security our paramount priority and developed, I believe it's 8 layers of defenses against these evil actors, right? What does that look like? That looks like delayed settlement on withdrawals, right? That looks like sanction screening. That looks like going and getting all of our contracts formally verified, a move that barely any DeFi teams really do, right? That means going and getting our contracts audited so many times that our developers are questioning, why are we getting them audited again? You know, these are all things that we are doing to go above and beyond to enable it so that myself and the developer team here at Waymont can actually sleep at night.
Look, I've been impressed on the security side of things. Like, I know security is expensive. I didn't know how expensive it could be, but I've seen every change has been audited, and it's crazy. And I didn't know that this happened behind this kind of protocol that really cares. Uh, Not about the protocol itself, it's more about the users. Okay,
Yeah.
so yeah, I wanted to also highlight that. So just to end up this call, um, I wanted to ask you, like, if someone walks away from this conversation with one idea, what should it be, Jay?
DeFi isn't dead, and Royco and DeFi together will go and finance the world.
That's super super cool. So yeah, that's the end of this podcast. It's been a pleasure. I really enjoyed listening to you. So yeah, I will give you some time to finish up this call. But thank you. It's been a pleasure.
Likewise, thanks for having me.
Okay, bye bye. Thank you everybody for listening to us.